Hello gentlemen, my name is Mat Conti. I spent 7 years as a market maker, generating more than 30 million euro for a large investment bank. And today I run my own hedge fund, where I automate every single one of my trading strategies. On the side, I'm trying to kick off this YouTube channel as a part of a bigger project. Properly educate retail traders beyond the misinformations you find online. You are more than welcome to follow along and to drop a random word in the comments to make both me and the algorithm very happy. Let's ride. Every regulated broker is forced by law to publish one number on their website: the percentage of retail clients who lose money. I invite you to go ahead and check those disclaimers yourself, which they sit between 70 and 90%. Not at one broker, at every single one of them. That number has not moved over the past 30 years. 3 decades of new platforms, new indicators, new strategies, new gurus, new trading styles, and the failure rate is sitting exactly where it started. When something fails this consistently, for this long, you stop calling it bad luck and you start calling it structural. Because retail trading is not having a rough patch. It has real, identifiable causes of death. So in this video, I'm going to do something that no one in this space is willing to do: an autopsy. We're going to open retail trading app and name the actual reasons it wipes out the people who try it. There are 3 main reasons. The first cause: almost everything that a retail trader does has never been validated. Think about how the average retail trading strategy is actually born. Someone watches a YouTube video, 2 moving averages crossing, a setup that looks clean, a screenshot that is promising a 95% win rate. It looks so convincing that the next morning they're trading it with real money. At no point did anyone ask the only question that matters: does this thing actually have an edge? And the few who do try to check it in the worst possible way. They open a chart and they start scrolling, bar by bar, day by day, hunting for the pattern they have already decided that they like. This is not testing. That is collecting evidence for a verdict you reached in advance. Your eyes will always land on the trade that worked and quietly skip the 10 trades that didn't. And this is why retail trading still lives on a chart. Drawing lines or fair value gaps feels intuitive. It hands you the feeling of control. But a feeling of control, it is not the same of actually having the control. The second cause is not technical, it is psychological. And it is the one that the industry quietly depends on. Almost everyone arrives at the markets carrying the same wish: turn a small amount of money into a large amount, with as a bonus, doing it as fast as possible. That is the feeling that fills casino floors, not trading floors. And that feeling does something dangerous to you. It blinds you to risk. When your whole focus is to get rich, protecting your capital feels slow and boring. So you simply skip it. But the goal is never only to get rich. The goal is to get rich and staying rich. Capital preservation, it is the entire game. And the get rich fast mindset throws it away on day 1. An entire industry now sits on that hope, the prop firm model. I'm not telling you the funded accounts are worthless, but look honestly how most of it is sold to you. You are shown people getting large payouts without realizing that that's only a very tiny fraction, part of a small group of people who passed and got paid. You are never shown the denominator. The thousands who paid the same challenge fee and failed. That tells you what the real business model is. When a business earns more from the people that are failing than from the people that are passing the challenge and getting funded, you're not looking at a trading firm, you're looking at a casino, where the challenge fee is the house edge. The third cause: almost every single retail trader is learning the markets from people who were never qualified to teach them. Generally, you have two types of people. The first type, the one that got lucky. They made money in one strong run, and they confused a good run with a repeatable skill. They generally think that you can do it too, because they did, but they have no idea on the why it worked and no idea on how to actually teach you that. The second type is far worse. They never really traded at all. What they mastered is social media and marketing, the content, the hook, and the funnel. And you can spot that second type instantly. They sell you a feeling, not a method. Get rich fast, and here is my car, here is my watch as a proof. Then when their method fails you, they never question the method. They turn it on you. You didn't want it bad enough. You didn't put in the work. The system is never broken. You are. A real teacher tells you when an idea doesn't work. A marketer tells you that you didn't work hard enough. And I highly suggest you to learn to tell the difference, because one of them is on your side and the other one is just keeping you subscribed. So this is the autopsy. Nothing gets validated, a casino mindset runs the show, and the teachers were never qualified to teach it. 3 causes, 1 outcome, repeated for decades. You need to start thinking about trading like a recipe. If your ingredients are set up by TJR, ICT, MAMBFX, and your method is opening a chart and follow your gut, you can hand that recipe to the best chef alive, and it will still cook a losing strategy. The output is decided by the inputs. Change the ingredients, and the dish changes. A trading hypothesis pulled from research papers, a structured process to validate, test, automate your trading strategies. With those inputs, the same chef has now something worth cooking. And this is the recipe that institutional traders have been using for half a century. Institutional trading doesn't happen on charts. It happens on data. The moment computers reached the trading floor, banks and hedge funds understood immediately that a computer, a machine, can measure how prices behaves much faster and far more honestly than a human eye. Charts never disappeared, but they became a way to visualize a decision. They stopped being the way to make one. An institutional trader is handed a profit target at the beginning of the year. Miss it and the bonus suffers. Miss it badly enough, you will lose your seat on the floor. Yet they never try to hit a full year target in just few trades. They understand that they have 12 months and decide their trades balancing 2 things: making money and protecting their capital. They are also not emotional, not because they're braver than you are, but because the risk is wrapped in statistics. They know the expected return of their strategies. They know the type of drawdowns they should expect. They know the number of expected consecutive losses. So when a losing day shows up and it sits inside their limits, they have simply nothing to panic about. In that way, emotions are removed completely from the equation. And then there is time. Roughly 90% of institutional traders' hours go into building, testing, and refining trading strategies. Not by scrolling on a chart, by writing code, running thousands of simulations, and letting the computer hand back an unbiased verdict on whether an hedge is real or imaginary. That is the real gap between retail and institutional trading. It is not intelligence. It is not starting capital. It is method. And the good news is a gap made of method is a gap that you can close. I built what I call the institutional protocol, a clear, repeatable process that carries you from an hypothesis to a strategy you can actually trade the same way a professional would. And what almost nobody tells you, the barrier that used to separate the retail trader to this process is gone. You don't need a trading floor. You don't need a quant degree. You don't need to be a developer because now you have large language models that can assist you coding your trading strategies while you focus on the logic. All the tools institutions used to pay millions for are now sitting on your laptop. The only thing that is missing is the protocol that tells you how to use them. Shortly after I started posting online, I understood that one thing is just discussing it in theory, but I needed to take the protocol that I framed and to have a regular person applying it. I wanted a pilot, and one of the first people finding my content was a guy called Tariq from Switzerland. When I met him for the first time, Tariq was the most average retail trader you can possibly picture. He traded purely on chart patterns, applying ICT concepts, lines and fair value gaps on a screen. He traded extremely emotionally, revenge trading very often. He never tested a single strategy, and he had never built a strategy of his own. On a side note, he also blown 47 evaluation accounts. 47. He had never written a single line of code, and frosting on the cake, he did not use ChatGPT. You might be thinking that I'm exaggerating, but all of this is 100% true, and I have all our sessions recorded. Then he went through the protocol. He stopped inventing setups, and he started building strategies based on hypotheses extracted from research papers. He developed his own strategies with the help and the assistance of large language models. So never having coded stopped being a barrier. He tested every single one of his strategies the correct way, following a process and not scrolling back in time a chart. And most importantly, his strategy went live only after the test, not his gut, said the strategy was ready. At that point, he bought his first evaluation challenge after following the full protocol, and he failed it. But this time, he knew exactly what the odds of passing were. He had 100% confidence on his strategy. He knew the strategy in and out. So right after failing the challenge, he bought a new one. And he applied the exact same strategy. He passed it. He got funded. Right after that, he got another evaluation account. He passed that one as well. Same strategy. And cherry on the cake, in less than 1 month, since applying the protocol, since following every single one of the steps listed, for the first time in his retail trading career, he collected a payout. And the crazy thing, it wasn't the collection of the payout for the first time after blowing up 48 accounts. The thing that really got him was that he passed those evaluation challenges. He got his first payout while he was at his day job. The computer was placing trades for him. And I'm not talking about some plug and play bot he bought online. I'm talking about a strategy he researched, built, tested, and automated by himself. That is the real difference. He did not buy a black box. He built a skill that he owns, a skill that produces him while he is at his day job, while he is out with friends, while he is asleep. He is not chained in front of a monitor, waiting for the entry conditions to be met. You can encode those. That by definition shouldn't be the time-consuming part. The hard work happens once, in the research and in the testing. After that, after you have validated your strategy, you can run it live, automating it. Again, I picked Tariq on purpose. He is not a math prodigy. He is not a developer. He was the textbook retail trader. The exact profile this video just executed an autopsy on. If he was able to go from 47 blown accounts to a funded payout simply by following the institutional protocol, then so can you. Because what you're missing is not the willingness to work hard. I know you have plenty if you're watching this video. What you're missing is a structured process. A process that I've built after years of retail trading, after 5 years of university, after almost a decade of institutional trading. And now the choice is yours. Either you apply everything that's been proven to work in this industry for half a century, or you keep applying what for half a century brought retail trading on the autopsy table. Retail trading has been failing for 3 reasons. Nobody validates anything. Everyone is chasing the casino dream. Almost everyone is being told by people who were never qualified to teach it. Not one of those is permanent. Every single one of them is fixed by a method. And that method has never been more within your reach than it is today. I will release the institutional protocol, a structured process, so any of you can learn to approach the markets the same way an institutional trader does. From hypothesis all the way to your tested and validated trading strategy. The waiting list is in the link in the description. That is the institutional protocol, and that is what this channel is about. If you found all of this useful, please drop a comment and follow the channel, because we're just getting started.